Hi there, Jamie. How you doing today?
Doing fine.
Good, good. I appreciate you and your wife inviting me out to your home. I want to take a few minutes and overview our program with you and answer any questions that you have, okay?
All right.
Now, how long have y'all lived in this area?
A year and a half.
Oh, good, good. Where'd you live before here?
Virginia.
Oh, excellent. Where in Virginia?
Martinsville, Virginia.
Oh, that's the race, NASCAR capital or one of them, isn't it?
How'd you know that?
I got one of my partners. He's from Virginia, so he told me. So, well, I'll walk you through. Here's a copy of the letter that you had received in the mail. And I'm assuming that this is your handwriting. Is that correct?
That's correct.
Okay. Now, this lays out that there is a death benefit for $138,400. That's your mortgage balance, correct?
Yes.
Okay. And then this is your address, 301 Cane Creek Drive.
Correct.
Okay. Now, what was it about this letter that caught your attention?
I like the living benefits and the cash back.
Okay, great. You know, we hear that a lot. Those are very strong features of the plan. And I know that's why I have this type policy for my own family. So, but what we do, Jamie, before we get started with an overview of this product, is I first try to take a few minutes and find out if you even need it. Because we've got a very simple analysis that we go through to assess if, in fact, there even is a need for this plan. Now, if there is a need for this plan, I'll overview the Western Reserve Life product, explain it to you, and show you why thousands of people choose this plan each year. Is that fair enough?
That's fair enough.
Okay. Now, the only thing that I ask today is at the end of our overview, if you feel this plan is relevant and of benefit to your family, just let me know that. And if you feel this plan is not of benefit to your family, if you'll just let me know that. Is that fair enough?
That's fair enough.
Okay, great. So we've completed the needs analysis, the blueprint for life. So now we'll move to the next phase of the presentation. Jamie, before we get started with an overview of the product, I just take a quick minute and just an overview. We call it Insurance 101, if you will.
Okay.
And we just review. There's basically two types of life insurance. There's term and there's permanent. I'm sure you've probably heard of each, and you might know the difference between each. Are you pretty comfortable with the difference between the two of those?
No, not really.
Okay. Well, hey, I appreciate your candor, because I will tell you that a lot of people, especially us guys, will say, oh, yeah, I know the difference, when they really don't. So just to humor me for a minute,
all right,
let me overview this with you. So, Jamie, there's two types of life insurance. There's term and there's permanent. I liken it to term is like renting an apartment. Permanent is like buying a home, owning a home. So most people buy term for one reason, because it's cheap. Okay. Now, approximately 98 out of 100 term policies, Jamie, will never pay a death benefit. What would be your thoughts as to why they won't?
I guess they give it up.
They outlive it.
Oh.
They outlive it. Because term will terminate at a certain point. Okay. Now, if you can tell me the day that you're going to die, then we definitely should go the route of term.
No.
Okay, so I haven't had anybody yet that could give me that date, or if they could, something's kind of suspicious there. So term costs less initially. Here's a diagram that illustrates that. So when you get the term product, it starts out as very inexpensive. You pay your premiums, but when you get into your 60s or 70s and the term terminates, it becomes an annual renewable term, and the rate will increase exponentially or significantly each and every year. Now, one of those years, you're going to get a renewal notice, and you and your wife are going to open it up, and you're going to look at it, and you're going to see what the price is, and you're going to go, what?
Wow, can't afford it.
All right. Now, so you've paid premiums all those years, and you don't have a policy anymore, and who keeps that money?
The insurance company?
You bet. So the good news is you're still living. But in regards to your term policy, the bad news is you're still living. Okay?
Yeah.
So it costs less initially, but the cost goes up. You don't build any equity in it, and the coverage is going to end someday.
Okay.
Okay. Now, our plan is a permanent plan. Okay. This is a permanent plan. It does cost more initially. Okay. And you might ask how much. Well, we've got different options. I'll go over those with you, and you can choose the one that's best for you. So it does cost more initially, but the cost is level. It never goes up. Okay.
Okay.
So the cost is level. You do build equity in the plan. Now, this is not an investment. We don't represent it as an investment. Okay, but there's a structure in it to where you can build cash value or equity in the plan.
Okay.
And one of the options is you've got the ability years down the road, if you choose to get your monies back. And the coverage never ends. So that's term and that's permanent. This is a permanent plan. Now, before I overview how your plan is going to work, Jamie, I want to make sure I take a second and show you that now I have my coverage with Western Reserve Life. As a matter of fact, here's my policy. I'm a big believer that actions speak louder than words. You could have 10 people come out to your home and talk to you about different products, and probably 8 of them don't even own the product that they're representing. So if I don't believe enough in my product that I'd recommend it to you, then you probably shouldn't spend your money on it either. Wouldn't you agree?
I agree.
Okay, so here's my policy with Western Reserve Life. Now, Jamie, I probably need a little bit more coverage than you and your wife do because I've got 4 kids at home, ages 8, 11, 13, and 15. So this is just for a mortgage protection plan, and then I have a couple of other policies as well to make sure my family's adequately taken care of.
Okay.
Because as we say, you can't plan your future in the future, you know?
That's right.
So I've got a $500,000 death benefit, and my premium is $600 per month. Now, I can't speak for you, but $600 is a lot of money to me. I mean, I could use that to pay for braces for a couple monthly payments for my kids, a lot of diesel in my truck, or whatever. So obviously, I believe significantly in Western Reserve Life. They're an A+ rated carrier. They've been in business over 50 years. Their parent company, Aegon, has been in business over 150 years, you know, and is about a $20 billion a year company. We only work with A-rated carriers or better. Okay? That way we're able to go out and shop and find who's going to give you the best value for your money. Now, I will tell you before I move forward, if all you care about is who's cheapest, is we might not be right for you. Because as we say here in the South, good things ain't cheap and cheap things ain't good. Okay? So you're probably more concerned about getting good value for your money instead of just who's cheapest.
Yes.
Because 10 or 15 years down the road, you don't want to have a plan that's not there anymore because you chose a cheap company. I would have guessed when you and your wife picked out this home that you wanted to move into, you probably didn't walk into it and go, wow, this place looks cheap, let's buy it. I mean, you got it because of the value, right?
Yes.
And that's why I chose Western Reserve Life, and that's why I'd recommend Western Reserve Life to you, okay?
Okay.
All right, now let me get into the particulars and explain to you how your plan is going to